What do 12% of successful business owners have that you probably don't? Well, stay tuned to find out. My name is Tim McNeely, and I'm part of a group of successful business owners who are on a quest to maximize our personal net worth, not just in terms of dollars, but also in terms of relationship and impact. We found that we can't rely on traditional financial advice to get us to our goals. That's why we have to look to the super rich and ultra wealthy to help guide the way. We need lessons from people who have already made it to the top. But we don't have the same resources as the super rich, so we need to do things differently. We really need to pull back the curtains and reveal those often hidden strategies and tactics used by today's most successful individuals and families. We need to bring those down to our level. But the fact is, most of these strategies remain hidden from us because many professional advisors aren't well versed in them, and the ultra affluent, well, they don't care to tell you about these strategies. But I do. Welcome to the inner circle. So what do 12% of successful business owners have that you probably don't? The answer is a captive insurance company. A captive what? What's a captive insurance company, I can hear you say? Well, we're all very familiar with how traditional insurance works. Traditional insurance, you make premium payments, and if there's a loss, the insurance company will hopefully pay a claim for you. Well, what if there's a way that you could pay premiums to yourself? Well, that's what a captive insurance company helps you do. Now, I'm going to oversimplify a little because I want you to get the concept and I want you to understand this so that you can at least go have a conversation to see if it may make sense for you. So a captive insurance company, you create a closely held insurance company that can help you possibly better manage your risk in a very tax efficient and potentially profitable way. You can potentially save millions of dollars by creating a captive insurance company in your business. And an elite wealth manager, well, they're a great resource to help you decide whether a captive is right for you or not, and for assessing the effectiveness of your existing options. So, why do business owners do this? What is the power of a captive? If you want a copy of this report, I'll send that to you. Just make a comment or shoot me an email. I'll get you the full special report. But let's quickly take a look at some of the benefits of a captive insurance company. One of the benefits is it can potentially lower your insurance cost. How does it do that? Well, you're bypassing the traditional insurance market. That means broker commissions, profit loads, and the administration cost, those are out of the picture now. Another advantage of a captive insurance company, very favorable tax treatment. The captives are able to accrue a tax-deductible reserve. You've got the ability to recapture some of those underwriting profits and investment income. All those premium payments that you make every single month to an insurance company, how much of that premium goes in your pocket? Answer is zero. In a captive insurance company, some of those premiums go to you. You've also got the incentive to control losses because you now own the insurance company. You want to make sure that you're paying the right losses. You may also be able to get some coverage that wouldn't otherwise be available in the marketplace. And then lastly, and this is an important one, is you've got the ability and the opportunity to reinsure. One thing I often hear is, Tim, I'll never be able to put enough money inside of my captive to truly insure all the risk that I face. Well, as the owner of a captive insurance company, you are now in the insurance marketplace and you have the ability to buy reinsurance to help protect yourself against catastrophic risk. So let's go through a case study. I want to help you understand how this may be right for your business. So I don't know who any of you are. I don't know where you are in life. I don't know what kind of businesses you run. So I have no idea if a captive is right for you. But I want you to imagine with me for a moment that we now run a manufacturing and distributing company and we make musical instruments. Let's say we make guitars and one of our key customers is Guitar Center. Let's take a look at what some of the potential risk that we now face as the business owners of a manufacturing and distributing company. Risk number one is we've got some account receivables and collections risk. People don't always pay their bills, so that's a very real risk. Second risk we could face is directors and officer liability. What happens if there's some errors and omissions? What happens if one of our directors does something that they shouldn't do? Then there's also employment practices liability. We need to protect against claims from current, former, and prospective employees for things like discrimination or wrongful termination. There's also loss of key customers. Remember, in this example, I said Guitar Centers, one of our major customers. What happens if they start buying guitars from someone else? That could be a major major blow to our company. There's also product repair and recall. We're going to have things we have to repair, so that's a risk we face. And there's certainly others, but once again, oversimplistic, we want to just give you the concept so you can help figure out if this is right for you or not. So, what do the 5-year projections look like? Does this actually work? Well, total premiums over 5 years is $5.5 million in premiums that you're going to pay to your captive insurance company. Total expenses over that period, which are made of the losses that you pay, along with the underwriting expense, $1.47 million. The underwriting profit that you make, $4 million. The investment income, because you get to invest those premiums, $650,000. Total pre-tax income, $4.6 million. Income tax, $186,000. Total net income, $4.4 million. So how much is in your captive at the end of 5 years? $4.7 million. So through the ownership of an insurance company, through the ownership of a captive insurance, you as the business owner of this manufacturing company, in 5 years' time have been able to accumulate $4.7 million in your captive. That's a very powerful strategy for helping maximize your net worth outside of your business. Now, there are a couple things to be aware of, because one thing I see in here sometimes is advisors will promote these as a great way to transfer wealth to the next generation. Well, it turns out there's been some tax law changes, and that's not necessarily the case. So I just want you to be aware of that. Beware of someone who positions these as an estate planning tool. So I hope you found the information today on captive insurance companies very, very helpful. If you want to know more, I'd like to get you a copy of my book called Becoming Seriously Wealthy. I was invited to write the foreword to this book. And in this book, we look at what business owners are doing to maximize their wealth. And seriously wealthy we define as a net worth of $20 million or more outside your business. So if that appeals to you, if that's something you're working on, if you want to learn how to get there, go ahead and get a copy of this book. We'll go through some of those strategies and tactics that are used. But one of the most powerful tactics and strategies you can do is get a second opinion on your financial situation. If you're not sure that the steps you're taking today are the ones that are going to get you to where you want to go tomorrow, get a second opinion. Go talk to your existing team. Ask them, is a captive right for me? If they look at you weird and they're not quite sure what you're talking about, then I'd suggest looking to other advisors and doing an analysis of your team to make sure you've got the right people in place. Thanks for tuning in to the Inner Circle. Looking forward to bringing you more strategies from the super rich. I'm Tim McNeely, and I'm in your corner.